Hey everybody, how's it going? This is Dr. Sam again for another exciting lesson in accounting. Today we're going to talk about how to do closing entries. I know you're probably thinking, how do you do them? Please help me. I have a test on this. How can I do closing entries and master them? Well, if you're trying to learn closing entries from a corporation account point of view, such as when you've got common stock and dividends and retained earnings involved, this is the video for you. If not, if you want non-corporation stuff like capital and drawing, I've got another video just on that stuff, which I call closing entries for non-corporations. But this one is for corporations. So give me a chance to get my screen up and we will get started on this right away. So hopefully you can see my screen. And what I've got a completed worksheet in front of us. Remember, in the accounting cycle, the 10-column worksheet is an optional step. But from this worksheet, we're going to do closing entries. I'm going to kind of scroll to the right a little bit here so that you can see more of the content that we're going to be covering today. And what I thought we would do before I actually start in with the examples is to kind of give you some notes. So over here, right in this section, right here, I'm going to put it in bright yellow for you. I want to give you the closing entry procedures. So basically, what you want to do is you want to recognize that when you close the books, the reason why you're doing it is you're trying to bring that period to a close. You want to be able to start a new period nice and fresh. So when January is over, we want to start fresh with certain accounts, basically the temporary accounts. And this way, it's just easier to track your revenues and expenses and your dividends in a particular period. If you never closed, or you waited until the end of the year to close and someone asked you, hey, what's your revenue and expenses in June, you might be struggling to kind of come up with that answer pretty quickly. So by closing the books on a regular basis, you kind of get a better handle on your books, and also knowing how to do the procedure properly can really have your books match your financial statements properly. So if you notice, I have 3 goals. Goal number 1, again, if you can focus your attention to the right of the screen in yellow, goal number 1, update retained earnings. That's the number 1 goal of doing closing entries, because right now our closing entries in our our financial statements are up to date, but our books are kind of lagging behind. So we're trying to get our books to match those financial statements. So goal number 1, update retained earnings. And we're going to update it in the general ledger or T accounts. The goal number 2 is to get your net income, which we already know. Just to look at the far left of the screen, looking at that worksheet, we already know net income is $25.50. And keep in mind, if you remember learning the accounting cycle, your income statement, your statement of retained earnings, your balance sheet, they're already done. And they also reflect the net income of $25.50. But our books do not. So we're trying to get the books to match reality, or trying to get the books to match what's in the real financial statements that the general public sees. So our books are kind of lagging behind. Okay. So our goal is to get this 2,900 to match what's in the statement of retained earnings. And that number that's at the end of the retained earnings statement, that's the number that gets transferred to the balance sheet. So we're trying to see that if right now our books are kind of like I said before, lagging behind. So we're trying to get these books to catch up to the financial statements. So goal number 1, update that retained earnings. Goal number 2, let's get net income to appear in the books. So the books mean the journal and the ledger. And goal number 3, we're trying to close the temporary account. So, you've probably seen some of my other videos. If you haven't, you should. But if you haven't, you probably are familiar with my debit and liquor, kind of famous for those. Debit accounts go up by a debit, the liquor accounts go up by a credit. Well, I have another little saying here, and that's red. So when you close the books, you want to see red. All right, you want to close the red accounts. So we're going to close the revenue, the expenses, and the drawing. Or excuse me, I shouldn't say drawing. That's a non-corporation term. You want to close out the dividends. So revenue, R for revenue, E for expenses, and D for dividends. Those are the red accounts, okay? I've got the procedure listed for us. We want to close revenue into income summary. We want to close expenses into income summary. We also want to close income summary into retained earnings. What the heck? Where's income summary? I've never seen that before. Income summary is kind of like on an island all by itself. It's not a debited account. It's not a liquor account. It's its own little island, its own little special account. Its main mission is to help you close your revenues and expenses. That's it. So once it does its job, you get rid of it. You close it out. So again, closing entry number 1, close revenue into income summary. Close expenses into income summary is the second closing entry. Number 3, let's get rid of income summary, close it into retained earnings. And if dividends were, basically distributed, we're going to close those dividends into retained earnings. All right. So your first 2 closing entries get closed into income summary. Your last 2 closing entries get closed into into retained earnings. So now, one word of advice about closing entries: there's only a minimum of 3 and a maximum of 4. So it's not like adjusting entries where, who knows how many you're going to have period to period. With closing entries, it's either 3 or 4. That's it. So without further ado, let's go ahead and jump into the actual content of closing entries and show you how to do them. So we're going to do these in the general journal. And because of lack of space, I'm just going to use T accounts instead of the ledger. And right now you can see that the accounts that I'm highlighting are the temporary accounts, basically, along with retained earnings. So I've got retained earnings here. I've got dividends. I've got revenue. I got a few of the expenses. Okay, well, all the expenses that I have in this problem, but there's only a few of them overall. And I have income summary. Notice that I'm not highlighting assets or liabilities because those are permanent. You never close assets. You never close your liabilities. You never close common stock. I don't even have that listed here. All right. Retained earnings is a recipient of this closing process. So let's go ahead and do it. So if you look at the worksheet, if you're lucky enough to have to do like a test question off of a worksheet, you have an advantage because you kind of have an idea of what accounts go in an income statement. You already have a sneak peek as to the net income. So you have some advantages. Sometimes your instructor, your professor might just give you an adjusted trial balance, and you kind of have to figure out the revenues and expenses, the net income, kind of like on your own. But having a worksheet, you definitely have an advantage. So we're going to go ahead and do these closing entries. So I'm just going to slide the screen over so that you can see the adjusted trial balance in case that's all you're given. But also, we also have an income statement and an equity balance sheet as well. And I'm going to call this just equity instead of, owner's equity, because the owners are the stockholders. So let's just be generic and just say equity. All right. So here we go. Step number 1, we want to close the revenues into income summary. I have this magic word called red, or this fancy, memory device called red, but there's also something else super important. And that is when you close, you have to do the opposite of what you normally do. All right. So think of closing entries as opposite day. All right. So if something has a debit balance and you want to close it, you credit it. If something has a credit balance and you want to close it, you debit it. So you're going to do the opposite of normal. It's going to feel a little weird, a little dirty, because you're so used to always debiting expenses. You're used to always crediting your revenue, your earned revenue accounts. And now all of a sudden you got to break the rules. And that's what we're doing. We want to shut down the revenues to 0. We want to shut down the expenses down to 0. And we want to shut down the dividends down to 0. And the only way you can do that is by doing the opposite of the normal balance. Okay. So first closing entry, we want to close revenue into income summary. So let's just pick a month here. Let's say it's May 31st, right? And we're going to do that, all these entries on May 31st. You've probably seen this happen before in Excel. If this little hashtag thing comes along, it just means the cell is not wide enough. So use your best solitaire hand mouse experience, and just stretch that cell a little bit. All right. You can also double click and it'll adjust to the width. So on May 31st, we want to close our revenue. So you look at your revenue, you'll notice that it has a credit balance. Of course it has a credit balance because a revenue account is always credited. except now, all right? If you remember from a previous video I had, revenue was part of my shopping cart accounts. And a shopping cart, remember, we just keep filling the shopping cart, filling the shopping cart. We always credit revenue. It always went up until it's time to empty the cart, go to the register, pay for what's in the shopping cart. So when you empty the cart, you do the opposite of when you put it in. All right. So if we always credited revenue, now we're going to debit it. So the first closing entry is we're going to close revenue. Since it has a credit balance, we are going to debit it. It's going to feel weird to do that, but we're trying to close the account out. So we're going to debit the service revenue for $66.25, and now we're going to credit this brand new account that is just kind of visiting our books for the closing process, and then it goes away, and that is income summary. There's your first closing entry. If you want, I can put a little explanation. Something short and sweet. We closed rev into your income summary. All right. Short and sweet. Gets to the point. All right. Let's put this transaction in a yellow color. And let me post it. So service revenue, locate your service revenue. Here it is. And find your income summary. There it is. So now remember, when you post, you are just copying. So we're going to debit the income summary for $66.25, and we're going to credit, we're going to debit the service revenue for $66.25, and we're going to credit the income summary for $66.25. So remember, service revenue used to have the credit balance of $66.25. We're shutting it down to zero, but it can't just, disappear. Remember, in accounting, when you do transactions, there's always a minimum of 2 moves. So if I've debited something, I had to credit something. And the bottom line is, it just has to be put somewhere. So think of income summary as kind of like a little temporary holding tank. So we're going to eventually put the total revenues in there, which we just did. And we're going to put eventually the total of all the expenses in there. So income summary is like a jar that's going to contain the revenues and expenses. And the last thing that had revenues and expenses in it was an income statement. This document right here. So this was the last thing that we saw that had, revenues and expenses. So, think about the word income statement, and net income is the result. Could be net loss too, but let's think positive, net income. And then think of this, income summary, summary of your income. The revenues and expenses are what ends up in there. Let's do the next transaction. Let me pick another color here. Let's go blue. So the date is the 31st. You really wouldn't repeat May all the way down, just the day. And the day always goes to the very first, next to the very first debit of the transaction. So now we want to close the expenses, these guys right here. So let me put them in blue, right, just so you can see where I'm snagging them from. All right. So these are the guys I'm looking at. I mean, I could also look at these, same thing. All right. But bottom line is, notice that expenses have a debit balance. Of course they have a debit balance. And they have a debit balance because they always get debited. Expenses always get debited. So I now want to close them. So how do I close something that has a debit balance? Do the opposite. It's opposite day. You're going to credit it. So that means you got to debit something, and that something is income summary. So debit the income summary. But we don't know the number just yet. I mean, we kind of do. All right, it's this number right down here, but I'm going to pretend I don't know it. And let me just put a little box in there and give it a little different shade of blue just for, suspense purposes. So we're going to debit income summary. I'm going to leave the debit amount blank for right now. And what I want to do now is I want to credit each individual expense account. So I'm going to credit salaries expense, going to credit miscellaneous expense, going to credit supplies expense, and I'm going to credit depreciation expense. Okay. And since I said we're going to credit them, let's put the amounts in the credit spot. And now we're going to debit income summary for the total. of all the expenses. There's that 4,075. Let me take it off that ugly blue and put it to the real blue. Okay. But look, 4,075. If you've got a worksheet, you look at the bottom of your income statement debit column and you see that total 4075 there. So this acts as a great little kind of double check for you. Okay. Let's put a little explanation. This is closed the expenses into income summary. Right? And now let's post these into our T account. So again, I prefer that we had ledgers, but remember a T account is like the scrap paper version of a ledger. So let's post. There's the income summary of 4,075. And then let's credit each of these expenses. 2,600 is being credited to salaries expense. 400 is being credited to miscellaneous expense. 400 is being credited to supplies expense. And 675 is being credited to depreciation expense. Okay, so let's figure out what our balances are in our expense accounts. Well, if we did this right, they should be zero. So salary started out with a debit, we credit it for 2,600, new balance is zero. Miscellaneous expense started out 400 debit, we credited it for 400, new balance is zero on the debit side. By the way, the zero goes on the normal balance side. So a debited account would have a debit balance, so therefore we're going to put the balance on the debit side. Supplies expense, we credited something that had a $400 debit balance, and now it's got a zero balance. And then we got depreciation expense. Started out 675 debit. We credited the account for 675, and the balance is now zero. So we have now accomplished procedures 1 and 2. We've closed revenue into income summary, and now we've closed expenses into income summary. So look at closing entry number 3. We slide our worksheet over a little bit. Look at procedure number 3. We're going to close income summary into retained earnings. Well, to close it, I got to know what's in it. So I know I've got revenue of 6625. I've got expenses worth 4075. So look at that income summary jar. So the credit side represents the revenues and the debit side represents the expenses. Okay, so let's see what our balance is. So we're going to take 6625 and we're going to subtract the 4075, and we should get the same number that we got in the worksheet for net income. And there it is, 2550. And there it is over here, 2550, 2550. That's our net income. Net income, summary of your income. How did I get this net income? Revenue minus expenses. How am I getting this one? Revenue minus expenses. So this acts as like a double check to make sure that the accountant or the bookkeeper did the procedure properly. Okay, so closing entry number 2 is done. So that one, I'll put that one in blue there. We've completed that one. Now let's get rid of income summary. So our brand new house guest, came into the books, helped us kind of sweep or close out, the accounts. And here goes. So now we're going to do the closing of income summary. So when you're closing something, that's what your eye should go. So go to the income summary account and notice this account has a credit balance of 2550. Whenever income summary has a credit balance, that means you have a net income. If income summary had a debit balance, it would have meant you had a net loss. All right. It's a net income because the revenue of 6625 is greater than the expense of 4075. So result 2550 credit balance, which means net income. So how do I close something with a credit balance? It's opposite day. That's right. You're going to debit it. So we're going to put in the date, 31st, and we're now going to debit income summary. And you're going to debit it for that 2550. You'll then need to credit something for 2550. And what's that something? Well, what are you dumping it into? You're closing it into retained earnings. Okay, and let's put a little explanation there just to be consistent. And this is basically we closed our income summary into our retained earnings. Okay, so now let's post. When we go to debit the income summary for 2550, this account now ends up at 0. So we accomplished goal number 3. We closed the income summary. And now let's also update our retained earnings. Remember, the whole point of this, closing entry process was to update retained earnings. This was the number 1 goal. Okay. Well, we've done that. So let's do a little quick subtotal here. So our retained earnings from the month have gone from 2,900 up to 5,450. And we got one more closing entry to do, and that's the closing of dividends. What color do I use? Let's go green. All right, so on the 31st, we now want to close dividends. Dividends carries a debit balance. It's a debit date account. Debit date accounts carry a debit balance. So if you don't notice it here, you should notice it here. All right, but it's opposite day. We want to close it. So let me skip the debit for a second and let me indent the credit of dividends. And we're going to credit it for that 1,100. Which means I've got to debit something for 1,100. Well, what are we closing it into? According to the rules, we close dividends into retained earnings. So let's do that. Remember, when you do a journal entry, your debits have to be reported first and to the left, and then your credits get indented. There's no exception to that. I don't care where you are in the world. Everybody does it the same way. It is absolutely universal policy. And you're going to close your dividends into retained earnings. So now let's post. So I'm going to debit the retained earnings for the 1,100. And let's see what our final balance is in retained earnings. This number would match the amount that would be in your statement of retained earnings. And that's 4,350. And in the meantime, let me also close out the dividends of 1,100. Again, when you are closing the books, it's opposite day. You have to do the opposite of the normal procedure, the normal balances. You don't close everything out. You're only closing the temporary accounts. And as you can see all the way to the right in yellow, the accounts that are temporary are my red accounts: revenue, expenses, and dividends. All right, so, this is another video from Dr. Sam. Please subscribe. I've got tons of other videos on my channel that I'm sure can help you in your classes. Everything is step by step by step. I just don't lecture. I talk and show, So hopefully this is helping you a lot. And like I said, subscribe, send me a comment. If there's something you want me to cover that I haven't addressed in any of my videos, send me a little note, and I'll be happy to include something like that. I got 3 or 4 videos that are based on people asking me to cover some material. So, if I know the stuff inside and out, I'll make a video on it. All right. Well, that's it. So Dr. Sam saying goodbye. And I hope that this stuff helps you in your classes and on your tests and any, publisher software program that you might have to be working with. All right. Take it easy, everybody. We'll see you in the next video. Bye-bye now.